So Ethereum, again, the charts look absolutely astonishing. The on-chain activity, the adoption is by far the largest of anything in the space. So it's huge what's going on. The move towards ETH 2.0 means that, at a simple level, everybody's going to stake everything they've got to get it there. And so that takes all the coins off the market. There's about 11% of all ETH in circulation. So it's almost unbuyable. So you bring a whale into the market, the price just explodes. So I've never really seen a setup as good as this in that respect. So I think it's a very high quality bet for the time being because of all of this stuff that's either off exchange, being staked, and there's no free supply and demand keeps going exponential. So I like ETH overall. What's interesting is we're starting to see institutional adoption. So I spoke at Cowen's big event, and it wasn't about Bitcoin. It was solely about Ethereum, which took me by surprise. That's the first one I've done. It's kind of been referenced in other ones, but here I am now speaking to investment banks when they're asking me to come and talk about Ethereum and just skipping Bitcoin, saying, well, we assume you know Bitcoin, but here's another opportunity. So I think there's a lot more adoption to come in that space, and I think there's going to be an ETF there too. And again, with this really restricted supply that's going on because of ETH 2.0, I think it drives prices a lot. I think there are some that are skipping over Bitcoin because they get their head around it in a different way, because they think of it as a way of playing the entire technology of the space. So then they don't, it's hard for many of these institutions to stomach the narrative, the Bitcoin narrative of a store of value that central banks are destroying the world and a lot of this stuff, because that kind of goes against a bit of their business model. But Ethereum is not as, it doesn't feel like it's attacking them as much, because it's like, here's a space and we're building decentralized finance on it, and everybody can participate. It doesn't feel that they have to change their internal narratives. So some are finding it just a bit easier to get their heads around what it is without kind of going against or kind of exposing the Wizard of Oz, which is the central banks and what they're doing to currencies overall. So all I do is look at adoption effects, because I'm not smart enough to figure out what chain's better than what and why they want to build on it, et cetera, et cetera. But interestingly, as I've mentioned before, Ethereum is exactly following Bitcoin in 2017 in both price and price structure. Bitcoin is following Bitcoin 2013, which is fascinating, in price structure, but not in price itself. And then so I thought, I bet you Solana is following Ethereum in 2017. If anybody was in that market at that time, Ethereum was the rocket ship that took everybody by surprise. And guess what? It's exact chart fit, and the prices are the same. So Solana is exactly following Ethereum. Ethereum's exactly following Bitcoin. It's like the magic is all in this network adoption, and it kind of all makes sense. The other two that are in that kind of fast growth, fast adoption phase where you see exponential price rises more than anything else is obviously Terra, probably Avalanche, and probably Polkadot. And I think, they will all do well in this cycle. And like Ethereum, they'll all go down a lot later. And then from that, we'll see how it builds out. But it's bizarrely consistent. I never thought this would be the case, because you see all the people online, it's like, my project. But when you net balance it all out and just apply like adoption effects and do these things look similar, they're almost identical, which is amazing. None of us would have thought this, but it kind of explains why Plan B's model works, because I think some way it's showing the same thing in a different way with network adoption and how it drives price. And it seems that, so consistent that it is pretty forecastable. Now, we don't know how the cycle's going to play out now. What's going to happen in the, in the bear market? When does that come? Does it come in the same structure? I do think it probably decouples to a certain extent, because I think the adoption is going to be really quite big. So that lowers, as a network gets more adopted, the volatility lowers. So I think we're going to see that this time around, and it will decouple. I also think the cycle goes on longer, just because of two key factors. One is ETH 2.0 will probably be, I think, the end of the cycle, because everybody will, once it unlocks, People will sell some of their ETH that they put in for the staking. I think that's a pretty common thing to do. That happens probably around tax season as well, so people realize gains. And then in addition, I think the ETF will have come out at that point, and a lot of the pent-up demand will be in, and then we'll have to deal with a bunch of people who don't yet realize how to deal with the 70, 80 vol asset. And you've spent a long time doing this. We all have, is to teach people how to hold, how in a network adoption effect model, you will get volatility, but is more than compensated by price if your time horizon is long enough. And we're going to have to teach all of these RIAs this, because they're all going to panic out. So, there's a lot of work for us all to do to get people to understand how to deal with high vol assets and what it means as well, what it could mean if they do hold on. That's why Bitcoin sits at the top of the risk pile, right? At the bottom of the risk pile, i.e. the foundation asset, because it is the most decentralized. It's not rocket science, and ETH is a little bit different. Okay, that's fine. But once you go further out, they become less decentralized, so they're riskier assets. Doesn't mean they don't play a role. They can't play the role necessarily of being that kind of reserve asset that I've talked about in the past, and the pristine collateral, because they do have a risk element which is harder to price, which Bitcoin doesn't have. So again, it's just risk curves for me, and it's more than consistent with, if you want to get a faster chain, you're going to have less a more centralized chain, and therefore it should be riskier. Get the right point in the risk curve, it'll go up. It also means that generally tend to be lower fees, so you tend to get fast network adoption. So these things can go up a lot. Now, what plays out in 5 years' time or 10 years' time? Who the hell knows which ones survive, which ones fall by the wayside, which ones get replaced? None of us can know that. But just keeping to that generalized framework, what's being adopted, what are you trying to do at this point in the cycle? How much risk are you trying to take? And therefore allocate your assets accordingly.
Let's talk about NFTs. Obviously, those have taken the world by storm. It seems like we've gone through a couple of different iterations of them. So there was the NBA Top Shot, then there was CryptoPunks, and there was Bored Ape Yacht Club. Now it feels like there's a gazillion different animals and photos, et cetera, that are being shared on my Twitter feed every day. And I've frankly just lost count. How do you look at maybe what's happened to date with NFTs? And then we can talk about what's going to happen in the future. But what's your evaluation of it?
So all of us have been talking about for a few years now that everything's going to be tokenized. And we were waiting, was it going to be real estate that went first? Was it going to be the securities industry? We didn't really know. And it ended up being the art market. I mean, who would have thought it? But that's what happened. And so here we go, attaching non-fungible value to a specific digital asset. And now it's tradable.